All right, welcome everybody. We are in our third speaker for today. Sam is on deck. How to trade VIX options. He's been a guest here before. He's back today. Sam, let me make you the presenter so you can share your PowerPoint. You guys, we are recording. We'll have that out, in the next 48 hours with the links, so that you guys can. And if they say their offer is not good, after midnight tonight or whatever, you just got to go make a choice. Be a trader. Make a choice. Make a commitment if you're going to do that. All right, Sam, I can see your PowerPoint now. Can everybody see his PowerPoint? And I don't hear you yet, Sam, but I see that your mic's okay. Speak up just a little bit for me.
Okay, can you hear me now?
I can hear you now. I feel like we're in a Verizon commercial. Okay, all right. You have 1 hour.
Okay.
Okay.
Excellent. Hello, everyone. Thank you for joining us today. I'm always happy to be on the show. Our goal over the next hour, maybe 45 minutes to an hour, is to give you the lowdown on trading the VIX, all things volatility. My name is Sam Borgia of TradingGods.net. Our goal at Trading Gods, of course, is to help traders access the volatility markets. So whether it's through the ETNs, the options, or the futures market, we live, breathe, sleep, eat volatility. And as you saw over the past few weeks, volatility has become more relevant in the market after quite a long down period with the latest uptrend in stocks that really has been going on since early last year. Obviously, with the Trump rally, made volatility obsolete. But the good thing about the volatility markets is that you can make money both in up and down markets. And we're going to show you how to do that today and talk a little bit more about volatility and the various VIX trading products that you can use and how Trading Gods can be of assistance. So having said that, I just want to go over a few disclaimers here just to remind everyone this webinar is intended for informational, educational, and research purposes only, and that it should not be construed as investment advice. So we strongly recommend that you seek out the advice of a qualified financial advisor before you make any and all investment decisions. And I just invite everybody just to kind of glance over this disclaimer here. We also have this following disclaimer from FINRA, simply talking about the risks associated with trading any kind of leveraged or inverse ETN. TradingGods.net, we do actively trade in the leverage and inverse products related to the volatility market. Just remind everyone that about the risks associated with that. And finally, the third disclaimer I'm going to show you is from the U.S. government regarding options. And options, of course, entail risks and may not be suitable for all investors. So again, we strongly recommend that you seek out the advice of a qualified financial advisor before you trade in the options market. So on that basis, today's agenda, we want to keep it pretty simple today. We want to give you an overview of the VIX, what it is, how it works, draw your attention to various VIX futures, ETNs, and options, as well as give you some information about trading strategies, where the VIX is now, what it's saying about equities, how you can make money in both up and down stock markets. We're going to draw your attention to some of the technical indicators that we use, including the Ichimoku cloud, mostly are aligned with our broader trading philosophy. Then we want to give you some overview about upcoming trading opportunities that could unfold in the short term here as we analyze the market. We're going to talk about a very special offer that we do have for you. Anyone who's interested in trading volatility, why TradingGods.net can help you in that market. And you can always contact me at sam@tradinggods.net. Any questions that you might have about volatility or about the product that I'm going to talk about later today. My Q&A is there, my email is there, and I'd love to hear from you. So, just an overview of the VIX. I mean, I'm sure many of you have heard about volatility. We talk about volatility all the time. When it comes to the financial markets, volatility has a very specific meaning, at least in the U.S. stock markets. When we say vol or the volatility market, we're mostly referring to the CBOE VIX volatility index, which shows the market's expectation for volatility 30 days from now. So the CBOE VIX is a continuous minute-by-minute snapshot of the expected market volatility in the S&P 500, the benchmark gauge, over the next 30 days. It was first introduced back in '93, and the second version that we use today was introduced back in 2003. It's commonly referred to as the fear index, Wall Street's preferred fear measure, and it trades inversely with the S&P 500 most of the time. And on that basis, we can do a lot when it comes to trading the SPY and the SPX as well, which we also talk about inside the VIX Trader program, which we're going to talk about a little bit later. It's one of the most widely watched and traded indexes. It's considered a new asset class that can be used for directional trading diversification as well as portfolio hedging. So, we talk about stocks, we talk about options, we talk about commodities, forex, and so on. Volatility is considered a new asset class in today's market because just how much volatility has been a mainstay in our market since the financial crisis. And what you'll find out soon is that it's mean reverting, and that the volatility market ultimately reverts back to its mean. So lately we've had a period where volatility has been very, very low, but as a mean reverting indicator, it always seems to go back to its historical average. Likewise, if volatility is very, very high, that mean reversion is also in play. We show you how to really look at that market and how to analyze and forecast the VIX mean reversion. So the next chart here, just waiting for it to load here in the audience view, but we give you a 20-year view here of the VIX and the volatility markets. So this chart, as it mentions, demonstrates the volatility market, the VIX, over the past 20 years. So what you see here, I'm sure most of you noticed this huge peak right around here. This peak, of course, corresponds with the financial crisis. So when the financial crisis hit back in late 2008, the volatility market surged as the U.S. equity markets were collapsing, right? So the S&P tanked, the Dow tanked, everything tanked. Volatility spiked to 90, a level that I haven't seen as a trader yet. I mean, back in 2008, I was still a student, but it was a massive, massive rise in volatility, and that was associated, of course, with a steep fall in equities. But over the next year or two, you see the volatility gauge decline, right? You saw it decline through 2009 as the Federal Reserve outlined quantitative easing and the markets began to somewhat stabilize. But you saw volatility again spike in 2010 and then spike again in 2011. This is associated with the various global crises, of course. In 2011, we had the Eurozone issues, the Eurozone debt crisis. Once that was settled, or once we kind of moved on from that, we had a prolonged period here of a bull market on Wall Street where volatility was very low by historical standards, right? This volatility gauge, as we mentioned below, trades on a scale of 0 to 100, where the long-term average is around 20 to 25. So when volatility is around 20 to 25, we're looking at historically average level volatility. When volatility is below that, we're in really complacent market conditions, as we've seen over the past year or so. So we had a pretty strong bull run between 2011 and 2015. I mean, we're still in a bull market today, but what we're seeing really since 2015 is prevalence of volatility coming back into the picture more often than not. We saw, for example, back in 2015, August of 2015, around China, the China yuan devaluation triggered the Black Monday crash. Volatility spiked again all the way up into the 50s. And then again in early 2016, we saw volatility rise. Last week and the week before, volatility did rise again as markets assessed geopolitical risks. So this chart really just shows you that volatility does find its way to rear its ugly head in the market. It's good to be prepared. It's good to be able to trade it and to hedge accordingly. And that's what the VIX Trader program by Trading Gods is designed to do. So now this next chart here, or this next slide, gives you just a breakdown of the various VIX trading vehicles. When we talk about trading volatility, now we know what volatility is. It refers to the CBOE VIX. Most of the time when we talk about volatility, in order to trade volatility, there's three ways you can do so in the market to do so economically and effectively. That's through futures, options, and ETNs. All are appropriate depending on your trading style. VIX futures are traded electronically on the CBOE Futures Exchange. Options, which began trading back in 2006, are listed on regulated exchanges, and they can be traded in options-approved securities account. They can both be used for risk management as well as speculation. So again, depending on what your strategy is, VIX options might be the best bet. Also, there's VIX ETNs, part of the exchange-traded fund family. These really show you how to go long and short on the various volatility products. There's the VXX, the XIV, and so on. A good directional movement in the market through the various ETFs. There's also options on ETFs as well. So to talk a little bit now about the VIX ETNs, I mean, the VIX ETNs tend to be some of the most popular trading products in the volatility market. The VIX ETNs are priced based on the movement of volatility options that are, of course, connected to the movement of the VIX. You can essentially go long or short volatility, and that's why the VIX ETNs are considered very popular. It's one of the most intuitive ways to trade volatility because you're either going long, you're betting volatility is going to rise, or you're going to bet it's going to fall, right? So some of the popular VIX ETNs that we deal with are the VXX from iPath, the XIV from Velocity Shares. There's also the XVZ from iPath, and so on and so forth. These become directional as well as inverse, as well as leverage on directional and both inverse products as well. So the major VIX providers that you're going to see when trading volatility are iPath, ProShares, and Velocity Shares. So again, this chart here just demonstrates the trading opportunities for VIX in both up and down markets. We saw the big spike back in 2008. So obviously, if you were long volatility back in 2008, you made a lot of money. And then there was a gradual decline after that as the quantitative easing was in play. Since then, we've been in a bull market more or less, although volatility has, ebb and flowed back into the market. And we saw it really pick up again in 2015. Since then, it's been kind of coming in and coming out. We saw it again earlier this month as the markets started Q2 on a bit of a jittery note as people began to doubt the Trump rally. We'll talk a little bit about that as we go along. This chart here, the next chart on slide number 11, I'll wait for it to load, but it is probably the most important chart that I want to show you, and it's the one chart that I want people to really kind of look at and really kind of reflect on because it shows you the power of the VIX in predicting and analyzing the S&P 500 and why the VIX Trader program at Trading Gods were actively involved in trading the SPY and the SPX. If you're trading vol, it's a pretty good opportunity to also trade the S&P 500 because of this inverse relationship that we see unfolding most of the time. This chart here demonstrates the inverse relationship between the S&P 500 and the VIX Volatility Index. So the S&P here is in the candlestick, whereas the volatility index is in the black line. What you see is that they move inversely with one another 75 to 80% of the time. So 75 to 80% of the time when volatility is rising, it means the S&P is falling. Likewise, if the S&P is rising, it usually means volatility is on the decline. And we certainly saw that this year. You saw volatility decline to multi-year lows earlier this year as equities reached all-time highs. The S&P 500 hit multiple record highs since the Trump presidential win back in November. The last high, though, was in early March, so it's been about 6 or 7 weeks, I believe, since the S&P has hit a new record. So volatility over that period has been slowly and gradually picking up speed. 2 weeks ago, we saw a 23% gain in the volatility index. Likewise, the S&P declined that week by around, don't recall how much it declined by, but it did settle at 2-month lows a couple weeks ago. So this chart really demonstrates the inverse relationship between volatility and the S&P 500. Now, when it comes to VIX ETN trading strategies, there's obviously two ways you can go about it, two main ways. You can long and short the ETNs. This is one of the most popular way to trade volatility because you trade in the direction of volatility or you bet against it, essentially. Now, we mostly go on the short side of the XIV because there's a higher probability that trades are selling volatility instead of buying it. We want to be sellers most of the time. But there's also a good opportunity to go long on volatility. It's a lower probability trade, but it is good for a short-term burst in volatility. That's the VXX. I'm going to talk about that a little bit later today and how you kind of look at that market. So when it comes to the various VIX trading strategies, we obviously use various technical indicators to confirm our trades. One of the technical indicators that we use, and I'm sure many of you are familiar with, is the RSI, the Relative Strength Index. We use the RSI over a 2-period time frame, giving us a more holistic view of the Relative Strength Index. So the RSI, of course, is an oscillator giving you indicators about overbought and oversold conditions. We're not religiously tied to the RSI, but we do use it as a signal, right? We do use it as a signal to confirm our trades. And the VIX Trader program really shows you how to trade volatility from A to Z. And one of the ways that you do that is through confirming your trades through a technical indicator like the RSI. We also use, when it comes to teaching volatility, the point and figure charting. The PNF chart is a good indicator of supply and demand in the market. The chart here shows you a situation where the buyer is in control versus when the seller is in control. Obviously, in the PNF chart, the columns of X's represents when the buyer is in control, and the column of those when the sellers are in control. So the PNF chart, the RSI, are just some of the ways that we teach volatility, and we show you how to confirm your trading signal. Another way that we go about teaching volatility and teaching volatility trading, of course, is to keep an eye on the MACD. The MACD, of course, is your moving average convergence divergence. It's, again, another good momentum indicator to confirm your trading position when you go about trading volatility. Now, all of this, I mean, when we talk about the RSI, the point figure charting, the MACD, these are simply technical indicators, and they're all built into our trading philosophy. When you decide to work with us at TradingGods.net, we give you 4 easy trading rules to follow, and this has really been the bread and butter of our success and of our student success in the volatility markets. We teach traders through a point figure method how to understand entry points, exit points, and supply and demand in the market. We give you 4 easy trading rules, and our trading system, our trading signals, and our step-by-step guidelines on how to trade volatility are based on 4 easy trading rules. We show you how to determine your entry point through anticipation trading, including buy a stop order. We show you how to determine your stop loss point through the PNF chart support levels. We show you how to confirm your trade with a short-term momentum indicator. That was, of course, the RSI and the MACD. And we show you how to set up and manage your trade over the long term. So we show you how to set up your initial order and how to move up or down depending on the broader market conditions. So the VIX Trader, it's really your complete A to Z on how to trade volatility. We do have a very special offer I'm going to talk about a little bit later today. But when you decide to trade volatility, I mean, our goal is to make it as accessible and as easy as possible. And the 4 easy trading rules give you the A to Z on how to do that effectively. So on that basis, I just want to draw your attention to one more technical indicator that we use. Along with the RSI, the MACD, and the broader PNF charts, we also have a proprietary Ichimoku Cloud system inside the VIX Trader program that, again, shows you how to confirm your buy and sell signals through another more elaborate technical indicator. If you're not familiar with the Ichimoku Cloud, don't worry. The VIX Trader program gives you a broad 30,000-foot view as well as a granular view on how to trade with the Ichimoku Cloud. Essentially, the blue line represents the fast line when it comes to the Ichimoku Cloud. It's essentially the average high, the highest high and lowest low over 7 to 10 time periods. And these can be minutes, days, weeks, etc. The red line essentially is a slow line, and the cloud is the body of the Ichimoku chart that depicts the areas of support and resistance. So again, the Ichimoku Cloud, we use it to confirm our buy and sell positions. Another technical indicator that we use that can help you trade volatility effectively. I don't want to get too much into it today. I just want to give you just a sense of some of the trading tools that we do use inside the VIX Trader program. On that basis, I just want to move on back now to the VIX ETNs to give you just a specific snapshot of some of the most popular ETNs that we use and that you can use to trade volatility in the market. So when we talk about the VIX ETNs, there's really 2 main ETNs that we use that seem to be the most successful and the most profitable. The first one is the XIV. The XIV is your Velocity Shares Daily Inverse VIX Short-Term ETN. So essentially the XIV, it's relevant in a bull market because it moves in the opposite direction of the volatility market. So when volatility is declining, the XIV is rising. The great thing about the XIV is that it tends to move at 3 to 5 times the pace of the S&P 500. So any of you who's been bullish on stocks over the past 3 or 4 months, the XIV would have given you major exposure to the S&P 500 at 3 to 5 times the pace. So the XIV is one of the primary tools that we use for trading volatility. Again, you don't have to trade in the direction of volatility to make money, right? The XIV is your inverse volatility product that trades in the direction of the S&P 500, giving you substantial gains when the stock market is on the rise. Now, most of people, when they think about volatility trading, they think about, going long volatility, right? Trading in the direction of volatility. And that's what the VXX is for. The VXX is your daily percentage, it's your daily exposure to the VIX index. It trades in the direction of volatility. And as you can tell by the chart, it's not a buy and hold strategy. So the VXX ETN is very, very good for short-term bursts in volatility, right? These contracts roll on a daily basis. So any kind of short-term burst in volatility makes the VXX a highly, highly profitable situation. But again, only for the short term. So for example, if you go back to the Black Monday crash of August 2015, when the markets tanked, volatility surged. It was a very, very good 2-day period or so for volatility. Likewise, you go back to the Brexit vote back in June of last year, when the markets tanked something like $2 or $3 trillion in 2 days. Volatility spiked. The VXX would have been a very, very good short-term buy. Also, a couple of weeks ago, when volatility rose, 23% in a week, the VXX was a good short-term opportunity. So again, it's very good for a short-term hold, for a short-term trade, but the VXX isn't a buy and hold strategy. Of course, if you're trading volatility more holistically, you want to know how to use the VXX optimally. And our goal is to show you how to kind of move in and out of this market based on the broader conditions in the volatility index. So that really covers VIX ETNs. VIX ETNs, we actively trade them inside the VIX Trader program. The other program that we do offer is VIX options. A lot of people are trading options these days. Lots of opportunity for trading volatility in the options market. Options trading began back in 2006 when it comes to trading options. The options contracts on the VIX are listed on the regulated exchanges, and they can be traded in both risk management tools as well as speculative instruments. Options are traded in the options approved securities accounts. So when it comes to VIX options or VIX ETNs, we do have a two-pronged strategy, a two-pronged program inside the VIX Trader program, showing you how to trade options or ETNs depending on your overall goals. So I'm just going to wait for this screen to load. I want to give you just a snapshot of the open interest in the volatility market and why trading volatility is so lucrative. Take a look at this column here of open interest. As you can see, there's huge buying interest in the VIX, in the volatility market. And this really, individual stocks pale in comparison, right? So VIX options, VIX futures are highly liquid markets. The liquid markets are good for traders. They're very, very popular instruments. And as volatility climbs back toward 20, you see a lot more open interest in the volatility gauge. This simply gives you an overview of some of the demand and just how many traders are actively trading volatility. So it's not just some kind of obscure trading instrument. It's not an esoteric trading instrument. It's very, very popular. It's very active. It's a very liquid market that gives you a lot of opportunity for trading an element of the market that a lot of people are afraid of, right? And we can either be afraid of volatility or we can trade it profitably and make it part of our portfolio. So moving forward, just giving you an overview of our VIX and SPY options. I mentioned earlier that we do trade SPY options. The key points here is that our program shows you how to manage risk, how to manage your trade. And we always enter a position with a known amount of risk. And we show you how and when to enter and exit a trading position based on the broader technical indicators, based on the broader market indicators. The benefits of trading volatility as well as trading SPY options tied to volatility or that move inversely with volatility is that you have a liquid market that's very easy to manage with a high probability of success. So, of course, we always look for a high probability of success when we make all of our trades, and we do so over a short holding period. So if your goal is monthly income or steady income over time, the VIX Trader program definitely helps you achieve those goals through vol and through the volatility market. When it comes to trading VIX options specifically, we focus on VXX options as well as SPY options. You're waiting for the screen to load. So both the VXX options and the SPY options are highly liquid. Both benefit from time decay. And some of the primary trading strategies that we do use inside the VIX Trader program are vertical calls, both credit spreads on the VXX and on the SPY ETF. We use vertical puts. We show you how to set up a credit or debit spread depending on the broader market conditions. Again, all the trades that we make and the signals that we provide have a known amount of risk, and every position that we take has a probability of success of at least 80%, all the way up to 95%. So we want to be relatively certain, to the greatest extent possible, of course, that we have a high probability of success for any trade that we make. Obviously, that's no guarantee for success, but we're looking for steady, consistent, conservative trades over time with a goal of 1% returns a week over time. So just giving you some of the benefits here about trading VIX and VIX options as we move forward and wait for the new screen to load. There's lots of benefits trading VIX options. Obviously, if you have financial and lifestyle goals, it helps you build net worth, monthly income. If you're looking for retirement, or if you want to become a full-time trader someday, VIX options are a primary trading strategy for achieving that kind of success. Options trading goals, our goal is monthly income, looking for a probability of success of 80-90%. We're only making 3 to 5 high-quality trades a month when it comes to the options side. So again, you don't expect to see daily or multiple signals every single day. We're looking at 3 to 5 quality trades every single month with a probability of success of at least 80-90%. And we're aiming for 1% returns a week. Again, 1% returns a week over the span of a year is very, very significant. So slow and steady wins the race, and through options, we're looking at making 3 to 5 quality trades a month that you'll get in your inbox as the trading signal if you decide to work with us. So when it comes to the ETF side, again, we offer, it's a 2-pronged program, one for options, one for ETFs. If you decide to work with us on the trading ETF side, our goal is asset growth using the XIV and the VXX. So moving in the direction of volatility as well as in the opposite direction of volatility. We also use the various leveraged products as appropriate depending on the broader market conditions. So we'll tell you right now straight up, and I'll be very, very honest with you, the best potential is in the XIV because its moves are correlated with the S&P 500 about 3 to 5 times faster. So if you bought the XIV back in November, right now you'd be looking at huge returns, right? Because the S&P 500 has attained large gains since the presidential election, and the XIV moves in that direction, but only 3 to 5 times faster. So a very, very good opportunity to trade in the direction of stocks with the XIV. So one of the best strategies, or one of the best tools that we do offer inside the VIX Trader program is our VIX Trader alert signals. So you get the trades that we make as they happen, when they happen. We give you the exact entry point prices, the exact exit points, and the primary investment vehicles that we're using. So for example, if we shorted the XIV today, you'll get the alert immediately in your inbox showing you the exact position. And you'll also get the exact exit point when we decide to close the trade. So, of course, our goal is to make volatility trading as transparent as possible, as accessible as possible, and that's why we offer the trading signal alert system. I'll be perfectly honest, a lot of the traders that we work with, they just want this alert system because of our success in trading the market. But we do offer a broader education platform, a broader education program, in addition to the alert system that we provide. So before I get to some more of the benefits of the VIX Trader program, and to draw your attention to the very special offer that we have for you today, we just want to give you just a short-term look at the trading opportunities that could unfold next week. So the S&P 500 obviously rebounded this week, but the rally was cut short in the second half by geopolitical risks as well as falling oil prices. Oil prices declined something like 6% this week. And that, of course, impacted energy stocks and the broader S&P 500. Obviously, geopolitical risks tied to Syria, North Korea, and so on are having an influence on the market. Huge French presidential election on Sunday. It probably will go to 2 rounds, but the election on Sunday will be met with potential volatility on Monday if a certain outcome does unfold. And I think most of you know what that outcome is. If Le Pen makes the second round, that's going to be lots of room for volatility early next week as investors return from the weekend. We continue to eye earnings and economic data. On the earnings front, we are expecting a pretty solid earnings quarter. I know FactSet is expecting an earnings gain of over 9% this quarter, year over year. So earnings were a bit rocky last week, especially with the Dow blue chips, but overall we are expecting steady earnings growth over this quarter. And as earnings beat, you can expect that to feed into the S&P 500. When it comes to our current trading positions, of course, we're focusing on the XIV and the VXX. The VIX Trader program, we're also looking at earnings season, again, geopolitical tensions, economic data, and we're also eyeing the seasonal uptrend in stocks. You know, there's a saying that says sell in May and walk away, so that seasonal uptrend will be coming to an end very shortly. We'll see how that influences the market as we go along. So when it comes to the VIX Trader, we have a very special offer for you through this webinar. Just as a thank you for joining us today, we have a very special $9 mini course offer for you, giving you the option of trying our VIX Trader program risk-free for 2 weeks for $9. So the link will be in the chat box. For $9 for 2 weeks, you get to try the VIX Trader program, giving you access to how to trade the VIX, you know, an overview of what it is and what are the best VIX ETNs and options to trade. We also give you the VIX options trading program, Ichimoku cloud training, options and ETNs overview, as well as 11 instructional trading videos and access to our VIX Trader alert system. So $9, guys, $9, giving you 2 weeks access to the VIX Trader program. And after that, you can email us and we'll give you a discounted price on the full program, which usually sells for $14.95 as a lifetime membership subscription. We will give you that program at a 30% discount of $9.75. Simply email me after the 2-week period at sam@tradinggods.net to lock in at that special price. So again, $9 to try volatility trading with really the only volatility trading program in town. There's not a lot of people doing volatility training. I mean, the hedge funds, the institutions, the Wall Street, they're all trading volatility, but there's not a lot of programs out there dedicated to teaching volatility as an asset. Our goal through our program is to show you how to do that effectively. And for $9, you get 2 weeks of unmitigated access to the volatility market through the CBOE VIX using our VIX Trader program. So again, instructional videos, step-by-step guide, as well as our very, very popular VIX Trader alert system directly into your inbox, all for $9 through the special chat box link. Go to that link and join, and we'll be very happy to see you. Again, 2 weeks for $9. That's three or four cups of coffee at Starbucks. So I think that's a pretty good investment for potentially maximizing your returns in the volatility market over the long term. So just to give you an overview, when it comes to this special offer, and when we talk about our VIX Trader signal alerts, it's essentially the exact same signals, the exact same trades that we make, and we have our trading account with over $500,000 in funds trading volatility and exclusively volatility. So the signals that you receive do in fact reflect our exact trading positions as they happen. Inside the program over the next 2 weeks, you'll also get our daily VIX updates as well as our weekly webinars. So again, you can't lose $9. If you like what you see, please join us for the lifetime membership, which usually sells for $14.95. We'll give it to you for $9.75 by emailing me at sam@tradinggods.net. And that kind of gives you a very, very good opportunity to trade VIX for life with us. So again, that pretty much sums it up for me. I tried to keep it nice and short, nice and crisp. Just giving you an overview of how to trade the volatility markets. Again, for $9, you get to access volatility through the VIX Trader program. You get our instructional videos, you get our VIX Trader signals, as well as the complete guide for trading and accessing the volatility market. So whatever your strategies are, whatever your goals are, the VIX Trader program will help you achieve them. Click the link for our $9 2-week program, and we hope to see you on the other side. That pretty much covers it on my end, and I think I'll turn it over to you again.
All right, Sam, can you see the questions? Are you able to see the questions?
Oh yeah, I think there's some blinking lights here, right? Let me see here. Let's see.
You want me to? I can read them to you if you don't find them. And the link, they're saying they don't see a link, so let me grab it and post it for you.
Yeah, that'd be helpful. It should be in the
Sorry, yeah.
No problem. So one of the questions here from Tino is that you say success rate is your trade is 90%, for example. Every 10 trades alerts, only one fails. Yeah, so Tino, I mean, the way we go about it is, I mean, when we assess the market, our positions are very conservative. So we look for a probability of success of 90% of the time. So it's probability, of course, it's not a guarantee, but that would be a good way to look at it. For every 10 trades that we make, 9 are in the money, are successful. That's just the model that we employ. Again, it's not a guarantee of success, but it kind of gives you an overview of how we approach the market. We approach it very conservatively. What is the frequency of trades? The frequency, for our options program, we're making 3 to 5 trades a month, and our holding periods are anywhere between 15 and 60 days. So again, we're not day traders, and we're not holding it over months and months at a time, right? So 15 to 60-day holding periods. We're looking to make 3 to 5 quality trades per month on the option side, and a similar number on the ETF side as well. So again, it's quality over quantity here when it comes to trading the VIX options and VIX futures. Okay. So can you explain contango by Robert? That's a good question, Robert, and I didn't touch upon that as much in this presentation. But if you go over to a website called VIXCentral.com, and we're not affiliated with them, but VIXCentral.com gives you the prospectus on contango on a daily basis. A contango is a situation where the futures price is above the cash price, and the farther out you go on the futures contracts, the more expensive they become, right? Contango is usually the state of the VIX market. VIX is usually in a state of contango, which means the futures contracts are more expensive the farther out that you go. The state of contango is usually pretty solid when it comes to trading volatility. It's only disrupted during periods of short-term bouts in volatility. So, for example, 2 weeks ago, when volatility spiked, we started to see some backwardation in the market, where some of the near-term futures contracts were more expensive than the farther out ones. That usually only happens when volatility spikes over a short period. But over the long term, the state of contango is pretty steady when it comes to trading volatility. And you go to VIXCentral.com is a great website, kind of gives you just a snapshot of the current backwardation or contango conditions in the market. So how much is the service from Carol Ferris? Carol, as I mentioned in the presentation, for $9, you can try the VIX Trader program for 2 weeks. So it's a 2-week program for $9. You can try our program. If you like what you see, simply email me at sam@tradinggods.net, and we will give you the full program, the lifetime access, at a discounted price of $975. $975, that's a one-time only fee, giving you lifetime access to the program. We usually sell this program, if you go to our website, at $1,495, so nearly $1,500. Again, that's a one-time only fee for the entire program for life. Through this webinar, we want you to try it for $9, try it for a couple weeks, see if you like it. If you do like it, send me an email at sam@tradinggods.net, and I'll give you a special 30% off the discount of the full price for a lifetime access. IDA, it is $9 US. I myself am based in Canada, so I know that's a very relevant question. $9 US now comes out to around, $11, $12 Canadian. So it is $9 US. But again, it's a pretty good deal, 14 days risk-free. So when would you choose to trade VXX as opposed to XIV from Leo? That's a good question, Leo. So obviously, if I can go back, take the clock back to Brexit as an example, in June, late June, I would have traded VXX when volatility is rising, right? Because VXX is essentially a directional play on volatility. That's why we stress inside the program that the VXX isn't a good buy and hold strategy. It's not like you want to buy the VXX and just walk away for a couple of weeks. You want to buy it when volatility is on the rise, right? So a couple of weeks ago, we saw volatility hit 5-month highs. That would have been a very good opportunity to play the VXX, okay? We also saw it during the oil price sell-off back in early 2016. We also saw it during the Black Monday crash back in August 2015. anytime stock markets are declining in a rapid rate, the VXX is a good opportunity, right? So that's really one of the ways that you can look at it. The XIV, it's really good trading in the direction of stocks, right? So if you bought the XIV back in November, for example, once the stock market began to really achieve new bullish highs, the XIV would have been a great opportunity to enter the market because it moves at 3 to 5 times the rate of the S&P 500. So it's a great tool to use if you're bullish on stocks. From Lars, thanks again, Lars, for that. I appreciate that. The link is in the description. $9 for 2 weeks if you're interested. So from Walter, what is the length of the options you buy or sell? 1 month. So Walter, we are in the market when it comes to options for, between you and me, anywhere between 15 and 90 days, although most of our holding periods are between 15 and 60 days. And we look for probability of success of 1% a week. So 1% a week over those, 4 to 6 weeks is what we aim to achieve. So Jay, do you have performance figures in the last 5 years? So the VIX Trader program began about 2 years ago, and we're actually looking at putting together a complete audit of our trading success because we have been very successful in this market. We're right now crunching the numbers and putting together a complete, essentially an audit of all of our trades and how we've performed in those trades. We have provided those kind of services in the past during our presentations where we give you our trade-by-trade success. Expect that very, very soon. We're working on that now. So Arthur, have not found a link to access program. It's in the chat box now. You go to it's a bit.ly link. It's posted at 11:40. That gives you a direct link to our $9 program. The average number of trades per week. So Jim, on average, again, sometimes we make 1 trade a week, sometimes 2 trades a week. Don't expect to see a deluge of trades. We're only looking to make 3 to 5 trades a month on the option side, and a similar number on the ETF side. Hey, Sean from Collingwood. Yeah, it's awesome. I guess you can tell by my Canadian accent where I'm from, eh? What about UVXY? Yep, Claris, we do trade the UVXY. We do trade the leverage and the inverse products. You got to be a little bit more careful on those, of course, as we said before, because when volatility rises, it can fall again very, very quickly. The audit, MJ, will go back a couple of years. We started this program back in mid-2015, so the audit will go back to that time period. What if I purchase the program 2 or 3 times from Alex? Ideally, this program will be offered only through this link. We will then close it. So we'll give you $9 for 2 weeks, and then you'll get the discounted rate of $9.75 for life afterwards. No, Steve, it's not like that. If you sign up automatically, you don't have to cancel. So the way it works, I'll just explain it. The link that you see in the chat box is a $9 link. If you click the link and you buy, you just get the $9 program for 2 weeks. That's it. After 2 weeks, your access will no longer be granted inside the program. If you want to continue working with us, you'll come back and you'll submit a new order for a $9.75 discounted rate, giving you lifetime access to the program. So there's no recurring charges whatsoever. $9 for 2 weeks only, followed by $9.75 for life if you decide to work with us again. Lifetime program does include lifetime alerts, Mark. Yes, you get lifetime alerts of our signals as they happen when they happen. Okay. I think that pretty much covers it. Let's see if there's more questions. So Mahesh, this works for, obviously we're trading the volatility markets as well as the SPY and the SPX. So depending on what your trading strategy is, we're looking at trading VIX options, VIX futures, and VIX ETNs. And obviously that relates strongly to the S&P 500. So we also trade SPY and SPX. Hey Brad, I think the link now is in the chat box. If you go and you visit, it should be there. Hi, Lou. I think I just saw your email. I think you just sent an email now. I just saw it. I'm going to forward it to my colleague, and we'll have your question sorted out soon.